What's good, YouTube? It's your boy Zay, and we back with another special SPX indicator update. I mentioned how I would do the weekly update. I think we did the last video on Friday or Thursday, but either way, this is the weekly update for those that have been keeping track. The last time we talked about these indicators, it looked like they were starting to turn, right? And we talked about what they had to do in order for them to fully turn. And the scenarios we were looking at. So what we're going to do today is we're going to go through them and update it and kind of see, like, do they give us a feel for this upcoming week, which is probably the Super Bowl week for the stock market. So let's go ahead and get into these indicators. Now, before we get into the indicators, I do need you to go ahead, press that like button as well as subscribe to the channel. And don't forget to share this with a friend, a brother, sister, cousin, anybody that's in the market that can find this information valuable. So with that being said, let's go ahead and get into our first indicator, which is the dollar, right? And let's kind of get into the update, right? So the last time we talked about the dollar, I want to say it was around Friday, right? Or maybe, I think it was Friday. No, because we had already started to bounce because we was talking about the turn. And we mentioned that there was this gap here, right? We had a volume gap here. Now, I did do some cleanup on the chart, so they don't look exactly as the same from our update, but basically there was a gap here. And I mentioned how to try to get into this gap and reverse and potentially try to come and undercut these lows here. Now, what actually happened is we did sell down, but on Friday, we did not undercut these lows, and we actually bounced off of this 104.46, right? And we've been talking about how we wanted to undercut these lows and that ultimately we could find some structure or form some structure down in this area, right? So if we go down to, say, our daily and look at our line chart, you can see how this is the structure that I'm starting to talk about. Now, you see how we got a pop, we came down, we did not make a new low. Now, this doesn't constitute as a new high because we didn't break up here, but this could be starting to form some structure for us to try to make a push or break down. So what I'll be watching in this upcoming week, as we get into the beginning of the week with CPI on Tuesday and Powell on Wednesday, is that I want to see, do we make a move up early, right? Does the dollar, is it bullish early in the week? So say Monday, Tuesday, and going into Wednesday, which could then create a bigger breakdown afterwards, right? So what would that look like on the chart, right? So essentially, because we have this pin bar or indecision, what could possibly happen, or a scenario that I'm thinking about in my head, is that we have a up Monday and a up Tuesday, even possibly a gap up or somewhere, doji style candle on Wednesday. So that gives you somewhat of this look here. So we ended on Monday, going into Wednesday. We have fought our way back up into this gap and even seeing if we can try for these levels here, which would be a 106.46 or 106.82, right? Because as you can see, it gets to this peak and this peak, right? And ultimately what that does is you can start to see that structure that we started talking about, and it gets you to a decision point of if it's going to keep going, or do we, actually reverse off of all of that and start to come back down, right? And I talked about how, like, from a monthly perspective, I still feel like the dollar is bearish, meaning that, yes, it could always, it could keep trying to make this push up, which we want to see in order for it by the end of the month to start to make that push down into this order block. Now, from a weekly, it's going to start to make even more sense. So I want to break down the dollar from a weekly. Now, you remember in the very first update we did, we were here and I was saying, like, yo, the dollar looks weak. I think it's going to probably come down, undercut these lows at 105, and then try to come into this area, form some structure. Well, that was about 2 weeks ago. So now that all of this has played out, now I even have more information and data to go on. And what it looks like is my belief in dollar weakness still holds, because, again, if we were going to start to turn, this bounce off of this level would be a lot stronger. Thus, this update, because we still have a shot at this bounce looking stronger, because from a weekly perspective, if the dollar can close above this 106.96, then, we need to be careful, right? Because ultimately what happens is you now have a bounce off these lows. We now break this high, and then any pullbacks will be most likely met with buying demand for us to keep making our way up, right? And so the weekly close is what's going to be more important on the dollar, right? We could start off bullish, because if you see here, we didn't, we held these lows, so we could even gap up Monday or Tuesday and Wednesday and keep pushing. And they're going to put pressure on this, this gap here and this 106 and, this 107.19 or 107.20 that we talked about in the last update. Remember how I said, if this dollar is really going to turn around, we got to see a weekly close above 106.08 or 106.06, and it truly needs to break above 107.20. We didn't get it, but this upcoming week, because we have the catalyst of Tuesday and Wednesday, it is very possible. I don't know why these pop-ups are popping up, but yeah, it's very possible that we try to make a push for those levels early, only to see us fall off at the end of the week, thus creating what I believe we're going to see here is another breakdown, and ultimately we end up cracking through this 104. And as we get into, say, the end of the month, we actually could be seeing the dollar, as we get into the December 19th, December 26th week, should be kind of, it may have even broken this 103 and kind of came into this 101, because ultimately that's what we'll be kind of looking for, right? Like, does the dollar continue this down path? You get somewhat of a bounce where you might have a wick rejection in this area, and then the next 2 weeks we start to pull down, which could cause an end of the year rally with the dollar breaking down. And ultimately you'd have this type of market structure. You come down to stubborn support, and as we get ready to go into 2023, now the dollar is back at a place of support, and it can start to bounce and make its run higher, right? So that's what we're looking for from a dollar perspective. So from a dollar perspective, what I would say is, as we get ready to go into this upcoming week, is watch out for early strength into late weakness as we get into the end of the week. Or do we start to get weakness early for late strength, right? That's kind of the two scenarios that I see playing out. But based on Friday's close, it looks like Monday is going to be the early strength, and likely for us to get above this 105.55, kind of, again, get back into this gap, see if we can make a push into this 106 early, again, on the back of PPI going into Powell. And then if those events play out, that could cause the dollar to decrease or continue spiking. So again, we'll be live with the updates as these continue to play out, especially as we after CPI and during Powell, because these indicators will definitely give us some line of sight. So that's the DXY. Let's take a look at the bonds, right? So the bonds are the next indicator that we use, and the bonds, as I had mentioned, it continued its bullishness. However, we did get somewhat, I wasn't surprised of a pullback, but the pullback wasn't too big. So if we look at the bonds, it did go above what my target was. I said we were getting to some resistance at this 107. I had a target of 108. We did get up. This is a weekly, so let me go to a daily. You can see on the update, we were right here, right? I mentioned we were at resistance. We could pop up to the 108, right? 108 was resistance. And then from there, I was looking for a pullback. So what exactly happened? We popped above the 108. We traded 2 days at the 109. And now you can see we're starting to get a little bit of a pullback. Now we're still in a bullish uptrend on bonds. Still in a bullish trend on bonds. This is just a little bit of a profit take and cool off here. So what I'll be looking for in the bonds in this upcoming week is, again, when you look at this from a weekly perspective, this would serve somewhat as a, an evening star type of candle where, we got rejection and we closed below the week prior's close. So could this be the start of a turn on the bonds? Absolutely. And we have plenty of gaps, right? From a weekly perspective, we got plenty of gaps here. When you change it to a line chart, you can see how a hell of a run, right? And now we're on a little bit of a pullback, and technically you would think that you would pull back here, but let's go see. So if we go, so say this is the peak, And then this is going to be where we started to run. 50% retracement gets you to $100, right? So, and then you got 101.77 as the 0.618. So really $100 is where we don't want to see the bonds break down past. If they break down past $100, then this was just a relief rally for the bonds. And ultimately we're going, bonds are going to start selling back off. But right now I would say TLT, from what I see, still looks strong, a bit in a retrace period, right? So we were in recovery. Now, as we get ready to go into this week, do we continue to see sell-off pressure, right? So this is a daily. Do we continue to see some more selling into Monday and Tuesday and Wednesday as yields recover in anticipation of Powell? That means bonds will go down, and then ultimately we get a reversal at the end of the week or as we get through all of those events. So what I'll be kind of looking for is for the bonds to do this kind of scenario here, right? So do we kind of continue down, say into Monday, Tuesday, and then ultimately, into the end of the year, we looking for a bounce, something like that. So we come down and ultimately we made a new high to create a higher low, and then we bounce. And so as I look, actually watch this pivot, right? So there's a pivot right here. And how ironic that pivot's at 195. Remember how I said we don't want the bond to break 100. And then when we did that retracement, the 50% retracement was at 100. So could we retrace down to here only for us to find buying support and then for us to bounce back up until the end of the year? It's kind of like what I'm paying attention to for the bonds. So that's one indicator. And let's go into HYG. So our high yield corporate bonds. Now, high yield corporate bonds, again, in our last update, they started to turn, right? So we fell out of our box, but now we have found buyer support. We didn't break past the 74.22, and we were able to get back into our box, which signifies gaps, right? And if I look at it from a line chart perspective, you can see how we're just kind of consolidating. Now, we do have some negative divergence a little bit, but ultimately, we still haven't broken our 74.22. So this could be kind of, I'd say neutral, right? We probably need to be neutral on high yield corporate bonds. And this week is ultimately going to be a big decision for them because, again, early in the week, we could see them sell down and test our 74.22, only for them to bounce for us to get into that weekly gap that we talked about a few weeks ago, right? Because ultimately, I still think, when you look at high yield corporate bonds from a weekly perspective, we still are in a nice uptrend. This was just a small little pullback, right? Just a small little tiny pullback in order for us to bounce and for us to go higher, right? So, this is acting as support, and you can see the market structure that is forming here. We still truly haven't broken the area that once we get below 74.22, that's when you want to go back bearish on high yield corporate bonds. But right now, they look fine. We got a little bit of a cool off after a nice run off the lows. And then as we come into this critical week, we can see a little bit of pressure on this 74.22 only for it to continue higher, or we actually hold this level and we are able to continue to bounce higher into our gap in the 76 area, and ultimately to this 50-day downward moving average, which is at 77.53. And so that's the high yield corporate bonds. That's kind of what the indicator is telling us there. So let's go into TBT, right? And our yields, right? So when we talk about our yields and TBT, I told you yields look nasty right now. You know what I mean? Look at this. We've been on a 1, 2, 3, 4, 5-week losing streak pretty much, right? Now, the thing is, when we last talked about TBT, we were right at a weekly gap. Let me go back to my weekly chart here, guys. Sorry about that. So we were right here. I think I had mentioned that there was a weekly gap. And again, I did some cleanup on some charts. So a lot of stuff that we had, I removed. But this was the weekly gap, right? This was the weekly gap that we were sitting on in the last update, right? Because at that point in time, I think TBT was sitting right on this weekly gap. And I was saying how we can come through and push through. So if we go to a daily, bingo, right? The last update, actually, I remember we were here because I was kind of like, man, this thing could turn around after this retest, like it retested these lows, it could turn around. Well, what exactly happened? Well, we actually went into this gap, we went down, and now we've recovered out of that gap. So we basically hit the gap and we bounced off of it. So now TBT is looking like yields want to recover. However, I'm gonna have some things that kind of dispute that, where I think this could just be a dead cat bounce, right? And the reason why I think it could be a dead cat bounce is because we look at the monthly, right? So when we zoom out and we look at the monthly, this is what we were talking about as far as this being a monthly order block. And then you also had this monthly volume gap right here. So actually, I think I had all of that highlighted. And when I look at this low, this order block, boom. And ultimately, as you can see, we hit the wick or the top of this order block, basically in this volume gap, and we bounced out of it. Now we could see yields recover from here, but from a monthly perspective, again, knowing what I know, I would think that ultimately from a monthly perspective, yields want to come down and just retest or even tap this 23.97. And when I look at it from a weekly perspective, especially on a line chart, again, if this was going to be a true bottom, this bounce would be a lot stronger. So what this bounce is telling me is that, okay, it's starting to look like a bounce, right? And if yields, let's say in anticipation of CPI and FOMC, the yields come out the gate early, Monday, Tuesday, Wednesday, and start to rally hard, right? So they could kind of make a push up to say about 30, or TBT could make a push up to 30. And then when we get the decision, it makes a move down, thus creating this effect here, right? Weak bounce only to come down into the 27s, maybe even break 27 and come down to the 25, and maybe even break that and get into 23. Because remember, I told you there's a lot of structure in this zone, right? There's a lot of structure in this zone, and I'm gonna get rid of that because that's where that gap is. And ultimately, this is where you would want to see TBT come and start to, and I'm gonna even remove that, right? In order for it to, kind of start to form its base. And then for a turnaround, right? And if you look at a 1 day, you can see in this highlighter, there's tons of gaps, and there's just a ton of structure that could be formed in this area. So ultimately, what it looks like from a daily is we have TBT pushing up, a couple days, maybe even breaking this high here, only for it to then turn around and basically come back down. And actually look at this peak. I'm gonna get this peak, the max we can see TBT go. There we go. I don't want to see TBT no higher than 29.22. If it gets to 29.22, we need to see rejection in order for it to start to break down and come back into our 24.23. And it would look very much like this, very kind of sloppy, right? So push early into a breakdown. And let's go look at our yields. So our yields, the 2-year is what, and the 10-year is what has me thinking that TBT still has pressure on it, because look where we're at. We finished right at this pivot. Remember how I talked about shoulder, head, and shoulder? It's not making new highs on the 2-year. So ultimately, I'm thinking the 2-year wants to continue breaking down, right? We get some rejection here, and we're trying to come back to ultimately attack these lows that we've been talking about, which is 4.0 down to the 4%, right? Which represents a sick economy, honestly, though. Even we want to see yields come down, but if they come down like that, that's really not a good thing. Look at yields from a weekly perspective. As you can see, the structure we're talking about, we're steadily making lower highs, right? And ultimately, when we see the yields break down, they're going to do something, it's going to be a nasty fall. It could be a nasty fall. There's no real support in this area. And we could really see yields just, collapse. And I don't know if that's going to be I don't think that's going to be a good thing. Remember how we talked about from a weekly, we still have our eyes on this 3.99. And so this week, could we make a push up only to get rejected and have a real solid flush on the yields? That's the 2-year. We'll see. Looking at the 10-year, we are right in our zone that we talked about. Remember how we had this high and this low? Look where we at from a weekly perspective. Right in that zone. So again, as we get ready to come into this week, we could definitely have a push up, but from a weekly perspective, if the market's going to turn around and go bearish, then we need to see these indicators go bullish, meaning we need to see the 10-year close above say 3.7 and even break this high of and get to say a 3.8% rate, right? Or so PPI and PAL, all of them this week will have the power to push it. If they can't do it and these yields can't stay up here and maintain that from a weekly perspective and keep breaking down, then my assumption is that we're going to see the 10-year could keep breaking down to come to this market structure right here at 3.2%, maybe even a little bit lower, maybe even a little bit lower. And, you know, that's going to, you know, should be good for tech, right? Should be good for tech. So let's get into our next indicator update, which is the VIX. Now, we remember, man, last time we talked about the VIX, we were talking about the turnaround. So I mentioned how it closed these gaps, but it did leave a new gap. And I don't like how it closed gaps to create a gap. Kind of whack. But when you look at the VIX and we take it down to our line chart, you got to say it built a very nice, you know, it looks like this could have been some type, I forgot the divergence it would be called, but I don't think this is bearish divergence. I want to say this is bullish divergence because we were going down as this was making flat. And now that we've broken out, and gone bullish. So I believe that is how most would categorize it. That's why I don't really be getting into them like that. Because sometimes I'll be messing it all up, saying it backwards. But the main point is this: there's divergence that we can see. As this was going down, this was going flat, and now that we've broken out, this is now broken out, which tells me that from a VIX perspective, I believe, again, going into PAL and CPI, the VIX is showing us it wants to continue to push to go to about 24, maybe even 25. So watch out for the VIX to continue to push and make a push into those uncertain events and continue to maybe even test these highs, which means that would put pressure on the market or some areas of the market, right? And if we go to a weekly chart and look at the VIX, you can see how we undercut these lows. And we talked about every time we get down to 20, that has been a signal to sell and look for puts. That's what I kept saying. I was like, yo, even though we down here, caution, like we're going to 19, like, God, this is it can't be a good thing. And we got the pop. But here we are going into a critical week, and we are at an inflection point because we can have a couple scenarios play out. If the VIX pushes early and then starts to reverse, and by the end of the week, this is what we see, right? A close somewhere down here, or, you know, this is what it looks like. Then that tells me for the next 2 weeks, the VIX will be bearish, and we might get what I've been saying is we can see the VIX go all the way down into a 17 into the end of the year, but that is going to set us up for what will be one hell of a bounce as we get ready to go into 23. You know what I mean? So just get ready for a scenario like that, right? Or we're just going to keep going. I'm in the camp that I believe, you know, we could push up early, but only to get rejected as the VIX comes down into the end of the year for us to set up for a big spring into 2023, which marks off our bearish year in 2023. That's just my thoughts. You can drop a comment if you agree or don't agree. But the way how I kind of see that playing out is we will have to come back and fill this gap that we left before 2022 is over. At least that's just my thoughts. So with that being said, how perfect would it be if you get people to be bullish on the VIX early by making it push up to this 25 and then only for it to sell off super heavy and keep selling off into the end of the year to fill this gap right here that we left, and for it to ultimately come fill these gaps that they left early in 2022. And then again, by the time we get to 2023, we're ready to rock and roll and bring the volatility back. So that's the volatility, right? That's the VIX. That's where we at on the VIX. Now, you already know we're going to get into the special indicators, right? So our stocks above the 50-day moving average. Now, this doesn't look healthy. We talked about I kept mentioning how, and let me refresh this so we get a better look. I kept saying how this indicator, let's go to weekly. When we get up here, this thing has been on point with talking about turns, right? Turns. And we hit that point, right? We hit it up here, and look at this next week, we got a turn. So when we look at the stocks above the 50-day average, now we're at this critical area, right? We could keep breaking down, meaning the market will keep breaking down, or there was one point in time where I seen us make a push to 98. And what this, what I'm kind of seeing here, or what I would like to see play out, or what I'm watching to see play out is, do we actually get support here? Right? And what could happen, or what I could see happening with our 50-day moving average is that, again, if the market goes down on, say, Monday, Tuesday, and this comes down Monday, Tuesday into this gap area, that does set us up for a pretty nice, rally into the end of the year, because we come back to this pivot, we fill this gap, all these kind of get filled, and then we can make a push back up to this 92, 98 area into the end of the year, right? So right now, when I look at this indicator, the S5FI, it kind of validates what I'm saying, as far as like, I kind of want to see the down Monday, Tuesday, only for us to then bounce into the back half of the month, because this definitely still looks like it's bearish, or has bearish pressure on it, to at least come down into this area. And then from there, we can see, do we bounce and come back to our 92 area, only for us to then sell off into the new year. So from a S&P 500 stocks over the 50-day, still pointing to a bearish start, only for us to then bounce into the second half. So that's what I'm kind of seeing there. Let's look at our S&P 500 stocks above the 200-day. So the same situation is kind of playing out with this one. When we first started talking about it, I go to the, we had some weekly gaps in this area, right? This is the area that we had highlighted. We got into that area, and then we started to reject off of it and turn. Once again, we're only turning to this gap area. So could we have a little bit more pressure? Absolutely. Could we see a little bit more stocks fall below the 200-day? Absolutely, right? Absolutely. But what I will be watching for is, do we start to get into, say, around 51 or this 49 area form structure for us to then bounce into the end of the year? So as we look at this indicator update, I'd say Monday, Tuesday into Wednesday, we can see a little bit more downward pressure to kind of come hit on this 49, right, 50 area. But then from there, we got to see, where do we go? Or do we bounce, or do we keep breaking down, right? And if we look at it from a weekly perspective, it definitely looks like, we're on a very bullish run, which we are, right? With a lot of breath. We get a nice pullback right to this area of, say, 51 into this 41. And then do we get a nice end of the year bounce? So we get a situation kind of looking like this. So we come down, only for us to spring up, right? Only for us to, now I'm not saying we're gonna go that high, but you get my point, is that we come down to meet this indicator, this 50-day moving average, and then we bounce and, kind of get into our gap area. Actually, that's what I'll say, get into our gap area, right? Up into here. And so that's what I'm watching for in the S5, right? So it's kind of telling us we can see a little bit more downside, but then watching for a bounce for that end of the year rally. If we don't get a bounce in these indicators, then I know we're probably just going to keep selling off to the end of the year. For our last update, of course, it's the PE tracker on the SPX. So let me make sure this is updated from a weekly perspective. Again, quick update on it. We've been talking about it since it was here. We mentioned how we could get up to the 21, right? And it actually made this, I think this week here, the high, or the previous week high, was like a 21, say 4.3 or something like that. But remember, the whole time we kept saying, look, 21, when we got there, we've been getting rejection in this area every time. And that's basically a sign that the market has gotten too expensive overall. Well, look what happened. We got a rejection right off of the 21, and now it's back down to a 24.6. Now, this chart, I'm not going to lie, this indicator does have me a little concerned, because typically when we get rejection hard of this, the market can very much so keep dropping. And with this type of candlestick, you can see when we look at this indicator, typically that next week is a down week as well. So, and as you can see, the histogram MACD is starting to lose momentum, and this looks like it's ready to start curling for the black line to go over the red. And whenever we've had that happen, we've been going into a downtrend now. So with the PE, I mean, this really just tells us that valuations are still too high, like I've been talking about. And in a 4%, 5% interest rate environment, having the PE of the SPX at about a 20 is way too high. It needs to come down to this 18, even below 18 level, in order for it to be fair valuations. So what does that mean? When we get below 18, say to a 15 or 16 area, that's going to be where you're getting good value on the overall market. So it's good to then say, look at a SPY or a QQQ or something, like, mainly SPY, because this is the indicator for the SPX. So, we get below 18 into that 16, 17 area, it may be a good time to look at SPY, because then you're getting good value based on the PE of the overall SPX. So, those are the updates. Or no, we didn't do SPX. We didn't do SPX itself. Let's do SPX. So looking at SPX from a weekly perspective, ultimately what happened is we got above the 50-day moving average. And this past week, we had a down 3% week. Now, we did not break our first critical support, which is 39.06 yet. We didn't break that critical support, right? So if I change these to candlesticks, you can kind of see why 39.06 is our main support, because after we got this big old push, we consolidated, and 39.06 was the low we made, and we held and bounced from there. And so therefore 39.06 has been our new support. Then the following 2 weeks, we've gotten some, green weeks, and then now we have actually pulled back. So as we get ready to go into the critical week or the Super Bowl week, we have a couple scenarios that could play out. We definitely could test this support one again and come into, now let me go down to a daily, because I got to point out this order block here. Well, actually, you know what? I'm gonna have to use US 500. Sorry, got to use a different ticker, but the levels are the same. SPX and US 500 are almost identical, So this is how I use US 500 to gauge SPX. So when I look at US 500, there's an order block right here between 38.25 and down to a low of 37.47, basically 37.50. Now, the wick on this order block is at 38.40. And as you can see, there's a lot of structure in this area to where it could bounce off this order block, because there's, some structure in here, structure in here, structure in here. Not no real structure in there, but, structure in here too. So with looking at the indicators we just looked at, the dollar, the bonds, the VIX, S5, our indicators for the 50-day stocks, all of that good stuff. All of them signs added up together, right? How I said, I'm thinking the first 2 days of the VIX could be bullish. Well, it looks like the US 500 and the SPX wants to be bearish the first 2 days, or we look at it weekly, it now has a bearish momentum to it. And I'll go back to the SPX because I just want to show y'all that order block there, because it helps me understand the levels on the SPX. So when I look at the SPX from a daily perspective, we closed at 39.34. Now let me go to a monthly. Let's assume that this is a monthly order block, right? September is a monthly order block. If this is a monthly order block, then the open on this order block is 39.36, and all we're doing is just sitting on top of this order block. Now, the second part is we got to say, if this is a monthly order block, then we also have a monthly volume gap right here, right? And that monthly volume gap puts you right at this 30, let's just say the bottom of it is 38.70. Now, let's kind of chop it down a little bit. Let's go to a weekly, right? And when we go to a weekly, we can see how there's also some more space here at 38.51 when we go back into the past. And then we have this candle was the candle of June lows. And what I want to point out is that the open of this candle happens to be 38.38. Now, why is the open of this candle relevant? Because it helps me reference back to the US 500 when I said The top, when we go down to a daily, of this order block is at 38.40. Okay. Now, if we get into this first 2 days and it happens to be bearish and we get down to that order block top, that just so happens to be roughly about a 2.3% pullback, right? Roughly 100%, 100 points. Now, if I do the same thing on the SPX and then I try to get down there, you'll see that, like, okay, there's this big gap here. And most would say, okay, we're going to have to fill this entire gap and come to right here, which be this open, which is 38, say 10. But that's why you have to go look to the left and see that we have structure up in here. We have structure up in here. And this has been support before, right? So let's take it to a line chart again. This always is going to help you out. You also got a pivot right here too at 38.30. You got these pivots right up in here. So it looks like if we can get the, say, early week bearishness, right, and along with the other indicators cooperating and playing in sync, that ultimately we push down into Wednesday and get to the top of this order block, only for us to then reverse into the end of the year and, you know, make, you know, and start pushing, right? So that's kind of the scenario that you would get, is you get a fake breakdown, right? So all the bears come out only for them to get bear trapped, and then we rally into the end of the year on some like crazy-ish, right? And if you don't think that we can bounce from this 38, say 38.40 all the way up to these levels, I'm gonna just give you some percentages standpoint in that from this 38.40, if we just do our normal typical like bear market rallies, which is around 7%, so 7% from 38.40, how about that? It gets you right back to your 4,100. And then if we, because now you got FOMO, right? You got FOMO. Let's say we get a 10% bounce. Well, the full 10% puts you right at 42.22. Now check this out. 42.22 grabs these highs and these highs. And when we open this up, look where we at. There's a volume gap. Volume gap right up in here. Remember how we talked about that volume gap on SPX? There's a volume gap right here, right here. And so that will put us right in that area, And so, yeah, guys, so like I was saying, it puts us into the monthly gap right up into this area if we get a nice 10% bounce off of those lows. So it is very, very possible that, you know, we could have this scenario play out. So again, as I've been saying, that's, you know, these are the indicators, you know, the special indicators that I'm using that's kind of helping me out. This is the update. So, you know, it's a really big week. I will be sure to keep you updated on these indicators as this week plays out. So I may be going live a lot this week. We'll see how that all plays out. But guys, look, I hope y'all enjoyed these updates. You know, make sure to press that like button. Don't forget to subscribe to the channel for all the updates and stay tapped in. And always, I appreciate you guys for taking time to watch these videos. As I always say, stay blessed. Peace out.